Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, our weekly look at the world of business and finance. This week, it's wallets at the ready. We use money every day. It makes the world go round, we're told. But behind the scenes, there's a currency war, and it's starting to get ugly. Also, Christie's comes to town. The art auction giant hits Doha, and we speak to its European and Middle East president about art and business in this part of the world. And from NYC to the DRC, one woman's story as she tries to bring a little bit of hope to one of Africa's economic backwaters. So we'll kick off this week with what's being dubbed currency wars. Perhaps not as eye-catching as your Star Wars or your Cyber Wars or whatever you like, but in the long run, it is absolutely critical right now in a world still trying to find its economic feet. The war, as it were, comes from more and more nations manipulating their currencies, and if one nation does it, then others are likely to follow suit. Quick rule of thumb for you: if a currency is weak, then it's good for exports from that country and therefore good for that country as a whole, China for instance. Conversely, if it's a strong currency, the exporters get hit by that exchange rate and the country's economy suffers, like Japan. Here's how Brazil's finance minister, though, Guido Mantega, has termed this current currency problem. He says we're in the midst of an international currency war. This threatens us because it takes away our competitiveness. The advanced countries are seeking to devalue their currencies, and by our previous rule of thumb, a country which intentionally devalues its currency, pretty much shutting others out of the trade market. So Mantega used a term there, advanced nations. Who are they? Let's get some perspective now from our teams around the world.
When it comes to currency manipulation, no other country is as singled out as China. China faces a lot of pressure to appreciate its currency, and even the Chinese premier has come out to say that change must be made, that the economy must move from an export-driven model to a consumer-based one. But while everyone knows that China has a trade surplus with the United States, few know that China has a trade deficit with countries such as Brazil, South Korea, and Japan.
With all the economic uncertainty, the Japanese yen is often seen by investors as one of the most stable bets. The government is good, industry here is predictable. And so in recent months, hordes of speculators have switched from dollars and euros to the yen, driving the currency to all-time highs. And there lies the vulnerability. Facing major pressure from Japan's own industries, the Bank of Japan slashed interest rates to zero and sold off £1 trillion. That marks the largest one-day currency action ever in this country. It is a rebellion of sorts, as it goes against a tacit agreement among nations not to act alone on currency manipulation. But with Japan's own economy hurting and the government's approval rating falling by more than 10%, the government here was seen as having to act in this currency war.
Here in the United States, Washington has been critical of China and Japan. The Federal Reserve is set to begin printing money on a spectacular scale. That should further weaken the dollar, but stimulate the economy and provide much-needed jobs. Still, it is the emerging economies that will be hurt the most as investors seek greater returns. Developed nations, Japan, the United States, even Europe, can provide anemic growth at best. Just to illustrate the point, $500 billion has been withdrawn from funds tracking Western stock markets in the first 9 months of this year. Almost $100 billion of that has gone into emerging debt and stocks. That's drawn more countries into the so-called currency wars. The International Monetary Fund was charged with coordinating the global recovery, but it's losing its battle.
This consensus to work together has a bit decreased. I won't say it will disappear. There's still a momentum, but not as strong as it was before. And one sign of this is the different declaration by different countries that they may manipulate their currency to try to take advantage. This kind of currency war never ends well. Never ends well, and what we need is more coordination again, rather than beggar my neighbor policy. So that's also a big downside risk. All this just to show you that recovery is there, but still fragile.
Sama el-Shahat's in London. She picks up the story now.
Thanks, Kamal. So how real is the possibility of a currency war taking place? Now, given that the currency market is worth $4 trillion a day, we know one thing: any confrontation will be pretty expensive. The fear, though, is that any currency war will escalate into a trade war. And if that happens, then we'll be talking economic Armageddon. To shed more light on this, I'm joined by Michael Power, Global Investment Strategist at Investec Asset Management, and who's also author of The Hitchhiker's Ride to the Asian Galaxy. Michael, thank you so much for coming in.
Pleasure.
Now, it doesn't get more dramatic than this. We're talking about currency wars, we're talking about economic Armageddon and retaliation. Now, how serious is the threat of the currency war?
I think what we're seeing at the moment is the end of the process by which the US dollar has been the undisputed world's reserve currency. And it's an uncomfortable process because the world is changing and the institutions that surround the world are going to have to change with it. And one of the institutions has been the dollar itself. And we're now beginning to see the dollar, something like a beached whale, basically in trouble. And we're dealing with the consequences of it being in trouble.
Michael, you're very right about this because, I mean, the Chinese themselves are very concerned about what they're hearing coming out from Washington. Let's just watch what Premier Wen Jiabao had to say about the dangers of forcing Beijing to appreciate her currency.
We will gradually increase the elasticity of the exchange rate. On the other hand, we'll keep the basic stability of the yuan exchange rate at an adaptive and equilibrium level. Without this, there'd be no stability for businesses, for employment, for our people. And also, if China has social and economic problems, it would be a disaster for the world.
Now, he is very right to speak about the dangers to the world from almost impeding China's growth, isn't he?
He is right. I mean, he's not only right. There are other issues to take into consideration at the moment, but I do think that there is a rebalancing of priorities, of who has some say in what's happening in the global economy. And if you are the leader of 1.4 billion people, I think you do have rather a large voice. One has to remember the United States, in the grand scheme of things, is 300 million people, so it's less than 1/4 the size of China.
Okay, do you think we are beginning to see the end of America and the dollar being the world's reserve currency?
Absolutely. I think this is part and parcel of the process. I mean, the Americans did have this wonderful status where they told the French to go away in 1972 and saying, you know, it's our currency but your problem. I think the Chinese are now saying to the Americans, it's our currency but your problem. And we're now beginning to see a new world emerging.
And now tell me, what do you think this world would look like? I mean, definitely it will have Chinese characteristics, we know that, but other countries also in Asia will be playing a key role, I guess.
Multipolar. Don't think of the world as either one or other. I think there are going to be a lot of players in this game, and it's going to be a complex game as a result. Playing chess with 2 people is complex enough. Playing chess with 6 people is a very, very different sort of game, and it's not one that we're used to playing.
And where do you see India's role in this? Because there's been a lot of talk of the competition taking place between China and India and who will overtake whom. It's not clear.
Look, India's well behind China and will continue to be well behind China, only overtaking the United States come 2040. But nevertheless, it is slowly but surely moving itself into a position of some standing. And I think India will act as an alternate pole to China, to a lot of people, even perhaps to the Americans. They've been much more relaxed about sharing their nuclear secrets with the Indians than they have with almost anyone else in the world. So you will find a number of countries around the world, the Koreans, the Japanese, probably will quietly throw their lot in with the Indians as to create some sort of counterweight to the rise of China.
Michael Power, thank you so much for joining me.
Thank you.
Right, on to something completely different now, art. It is big business, ridiculous amounts of money to be honest with you, and as we learnt this week, not something which suffered so much during the downturn because in the end, a famous and valuable painting will always be a famous and valuable painting. Yusuf Ilkanen is the Europe and Middle East president of the world-famous Christie's auction house. He was in Doha this week. We caught up for a chat.
We already knew when we arrived in 2005 there was a great tradition of collecting in the Middle East. We've had collectors buying with us in London, Geneva and New York for many, many years. The truth was that we really had learnt quite quickly that Middle Eastern contemporary and modern art was wonderful, and there were some very significant artists that weren't known globally by our international contemporary buyers. And as the appetite for contemporary art had grown throughout the world, so we understood that here was an opportunity for us to, introduce some really significant artists who would sell very well, be collected by an international community, and sort of bring great energy to the market that we were launching in Dubai.
So that's one element, the supply from the Middle East. What about the interest you are going to have a big sale in Dubai in a few weeks' time, and you could have people flying in from all over the world for that. But what about investors in the Middle East wanting to buy from the Middle East?
Buyers in our sales come from 17 or 18 different countries, and they tend to be within the Gulf region. There are, though, buyers from outside the community who are interested in the investment value of the works. So we have a lot of buyers from Europe and from America that are looking at the best artists such as Zenda Rudi, Tanavali, Farhad Moshiri, and thinking, well, actually, at $200,000, this is an artist that I can put into my own collection, but who will grow in value over the years, and perhaps in 10 or 15 years' time, I'll give it back to Christie's to sell. But the reality is that the heart of the market is very much here, which is why it's so important for us to sell Middle Eastern art here in the Middle East rather than in London or New York. It simply wouldn't have the same energy or vibrancy.
What has it been like, though, in the last couple of years? Economic downturn, Dubai's troubles, well documented. Is it a case of something like luxury art becoming something which falls by the wayside in those times? Or, if I can say this, do rich people keep buying expensive art regardless of the economic conditions?
Well, there's a certain counterintuitive piece to this, which is that classically one would think that when the financial markets soften, that the art market would drop. But the reality is that a great Picasso or a great Zenda Rudi or a great Tanavali will always be a major work of art. And what we tend to see is that the very best works by those artists hold their value, if not go up in value. So, for example, in May of this year, we sold a Picasso painting in New York for $106 million. The most expensive artwork that had ever been sold, arguably at one of the weakest times of the world economy that we've seen since the 1930s. So actually, art is seen by many buyers to be a very safe haven for large amounts of cash.
And of course, a victim of this downturn, a company like Lehman Brothers, which just a few weeks ago you were selling off its artwork, getting money for the creditors, but then I saw it's not just art as well. I mean, things like a Lehman Brothers door sign. You're effectively dealing in memorabilia as well.
Yes, there's a memorabilia piece to that. The Lehman Brothers sale that we had in London last week, I think, trebled its pre-sale estimates. And there were some very significant works of art alongside, as you say, some ephemera. But such as Christie's, we have sold works of art and objects for centuries, that for almost 250 years now, which have all sorts of merits, whether it be Marilyn Monroe's dress, which sold for over $1 million, in which she sang "Happy Birthday, Mr. President" to Kennedy, or whether it be Charlie Chaplin's hat and cane. Christie's is about culture, and it doesn't need just to be classical culture, it can be pop culture as well.
Yusu Pilkanen there from Christie's, who also took me on a little tour of that exhibition to give us an idea of, what sort of money's really involved. We're going to show you some of that later. Plus a lovely story out of the Democratic Republic of Congo. One businesswoman who gave up her comfortable life and career in the United States to start a new business in her country of birth in Africa. That and more in a moment. Welcome back to Counting the Cost, your weekly business stop, right here on Al Jazeera. And if there is a cost to be counted anywhere in the world, it is the Democratic Republic of Congo. Bottom of the world scale for GDP and dubbed the hardest place on earth to do business. In fact, the World Bank, by its own economic standards, ranks it the poorest country in the world. Average annual earnings are less than $300 per person. And imports far outstrip exports, so even though much of the country's debt was actually wiped out earlier this year, it continues to build a deficit. So with such a bleak picture, why would a successful Wall Street economist leave her life in New York and move to the Congo? While making a documentary recently in the capital, Kinshasa, Al Jazeera correspondent Yvonne Ndege met up with her friend Dani, a young American woman of Congolese birth who swapped NYC for the DRC.
I left the Congo when I was 5 and moved to the United States. My dad married a Peace Corps volunteer. And so I grew up there, went to school there, college, everything. But it wasn't, I think I came back for the first time really after college. And then just as I kind of advanced in business and realized that I didn't like, kind of the Wall Street grind and the 9 to 5, you kind of see the trends. There's been just a reverse brain drain back to Africa. So you know, at some point I realized I was one of the few people that I knew of African descent that was not living and working in Africa. It's friends from Wall Street, like friends leaving banks, like leaving positions at banks, leaving positions at consulting firms, getting a couple of years of experience, in some cases getting many years of experience, whether it's private equity or other areas. And just realizing that the opportunities are so much, there's just many more opportunities, and you can just go further in Africa. So I started seeing that trend. And then the other thing, that just having worked in finance, you start looking at returns, like just cold hard numbers. And in Africa, I was like, why is no one paying attention to this? Like, you know, for like during the boom, the returns in Africa were actually higher than in the United States and, you know, in Europe, but no one seemed to be paying attention. The thing that's so compelling is that you hear about, you know, kind of, you hear about like, you know, frontier markets and these opportunities. No one's ever seen them. Yeah. No one's ever seen that. No one's ever seen a market where you can show up and like opportunities. I mean, it's just like, it's like walking through the streets, like you can like hit your foot on, you know, diamonds, or it's just like these opportunities are everywhere. And I don't think I've ever experienced that. Somewhere else, you're joining something someone else has already done. Here you can, you know, create a new model. You can take things that you've seen, you can bring them here. You know, in the US, do you really need another retail store? Do you really need another bank or telecom provider or whatever it is? Here you need everything, you know, so you feel like you can work and you can see the fruits of your labor. And I feel like there's just almost that direct, gratification that comes from your work. What I am already essentially doing is bringing investors here, acting as an advisor, as a consultant, because as I said, you need people to almost be an ambassador for the business community. And it can be hard to do business in a new place, but the thing that I find here is that people are much more sophisticated than you would think. They really do know what they're doing. And so it's a matter of bridging, you know, the West and bridging, you know, Africa, and kind of getting those two groups to learn how to work together. And so that's, you know, I envision having, you know, a consulting firm and doing advisory, and eventually, hopefully, you know, things like asset management or going into other areas of business.
And that interview, the result of a series of documentaries called States of Independence, looking at how African countries have fared 50 years after independence. You can find those online at aljazeera.net/English. Hit the Programs tab, it'll take you there. Now, one of Europe's biggest financial crime cases has come to an end. The so-called rogue trader Jérôme Kerviel was sentenced to 3 years in prison after being found guilty of gambling billions of his employer, Société Générale's money, without permission. The charges went from forgery to breach of trust to unauthorized computer use, all used to cover up trades worth $69 billion. In addition to the jail time, Kerviel's been told to pay the money he lost back. Bearing in mind he lost over $6.5 billion, we're not too sure how he's going to do that. Kerviel does plan to appeal, though. His lawyer holds Société Générale, quote, responsible for the creature it created, and believes Kerviel is paying for the entire system. Now, Kerviel's is the latest in a series of high-profile fraud cases, and some of them have people asking if the length of the sentences actually really fit the crime. Remember Bernie Madoff? He was found guilty of stealing $65 billion of investor funds. He got the maximum sentence of 150 years, which means he's not coming out of prison alive. But they haven't all been that impressive. In 2007, Conrad Black was sentenced for stealing $6.1 million from shareholders in his Hollinger media empire. But he got 6.5 years, but is currently out on bail as he appeals the ruling. And look at Kerviel, whose sentence pales in comparison to both. He gambled $69 billion of Société Générale's money, cost them $6.5 billion, yet he's looking at just 3 years behind bars. Now, as promised, back to Christie's, the art auction house, which this week held an exhibition here in Doha of art headed for a major auction in Dubai later in the month. Now, it's art from around the Arab world. And while I studied art history back in high school, it certainly didn't prepare me for the amount of money which some of these paintings are expected to fetch. Have a look at this. Christie's Europe and Middle East president again, Yusuf Buchanan, showing us how money and art collide.
Well, here you have a Mahmoud Said, the father, effectively, of Egyptian classical art. He studied in France. He was actually a lawyer by training, but in the 20s he executed these wonderful, expressive subjects of Middle Eastern, topics. Here you've got the whirling dervishes, executed in 1929. The sister piece to this, the Shadouf rather, which we sold only 6 months ago, made $2.4 million.
So the artist who painted this has sold for $2.4 million previously, and that's a record for...
That's a record for any Egyptian artist and any painting that we've sold in the Middle East to date. We have sold a Tanavali sculpture, the Iranian sculptor, for $2.9 million. So we're talking about very large sums of art.
This painting in particular, what would you think? What would you expect this to fetch?
Well, the estimate that we have on it is quite conservative. It actually mirrors the estimate that we had on Les Shadoufs. Les Shadoufs made 2.4. I could well see this selling for even more than that wonderful painting that we sold 6 months ago. I mean, anything over $2 million would be a huge success, but it is a masterpiece of early 20th century Middle Eastern painting. They're incredibly rare. You don't see them. Every museum wants to acquire one. And of course, you've got the major museums and institutions now competing for these here in the region, whether it's here in Qatar or in Abu Dhabi and elsewhere. So it could make a very strong price, but a magnificent painting.
It is, and I'm going to step back. If it's worth $2.4 million, I'm going to step back just a little bit from there. It couldn't get away fast enough, to be honest with you. Just feel nervous around things of that value, especially when you are, to be frank, a bit of a klutz like I am. Don't forget, Counting the Cost online. Head to aljazeera.net/English. Hit the business tab at the top. It leads you to the CTC page. You can find past episodes, this episode, blogs, they're all there. And please do keep your comments coming in on Twitter. Love hearing from you. @AJ Counting Cost is the name to look for. Keep an eye out there too for some major announcements about this program coming in the next few weeks. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. We'll see you next time.